All right, guys, welcome back. Good afternoon. What a nice day. Very bid. Continued through lunch. Continued. Um, in terms of what we're looking at, me bringing it with the Nasdaq here. We're looking for a Nasdaq to basically either sit on this trend line or get past the 328 level. We're past basically all the resistance here. If we look, we don't really have much other resistance. We really just had this trend line. This definitely puts growth into a much better spot, which is going to help significantly with averages, allowing for basically this entire value to growth sort of ratio to maybe balance out a little bit. Again, we've had significant value side buying over the last month or so. When we compare it to the Dow, for instance, right? Dow's been a lot more bid through here, hasn't lost much at all. It's still very close to all-time high. Only did about 60 basis points today. S&P did a little over 1%. And so you can see sort of it's tilting up a little bit. We're starting to gain some of that back. Very nice for, again, our mega cap positions on the tech side that we picked up at the low. Again, I talked about even our positions that we entered back here from the 11th to 12th on that low has held that value on the pullback through here. Again, basically this designation of just everyone's just buying the mega caps on the growth side. By buying all the mega caps up from the low, it's not the biggest move, but a 2% day on Apple and across all the mega caps is enough to lift the Nasdaq up that much as well, right? And so that's what we see when we look at the other individual sort of tickers in the Nasdaq and some of the other tech tickers that are on the smaller side. They're a little all over the place. We saw some things put gains on very quickly. When we look at the list, we have some tickers that we were looking at that have come off that low. And I talked about a little bit last week that it's possible that some of those are, short-term plays, not of very good long-term. We'll see if those are able to continue that sort of bid. And this is where we look for retail. Retail's coming in and buying up sort of the tech side. You can definitely see them. If you start looking at option volumes are up significantly on a momentum day like today compared to yesterday's buying. I think that's important to note. Someone like myself and institutions, the way we look at it is we're going to buy the dip yesterday, right? Who bought today? There was a lot more buying today compared to yesterday, especially on the tech side. And you saw that on the underlying value as well, 2% of the NASDAQ. A lot of that was driven by some momentum trading. So this is where we start to look to Friday tomorrow. Fridays are big momentum days to continue into next week. Be very interesting to see. I expect us to at least open above this level. Now that we're above there, it does put a little bit of a question mark where we open higher, or what's that exactly going to look like. I think a lot of it goes through what happens with these Chinese tech tickers. So we may open a little bit lower tomorrow on tech. I would say value is going to open up higher. I would expect the Dow and some of the other value side of things to probably open higher when you think about things like energy, banks, the way that those played out today. A lot of the demand was not there since it's already been here, right? So very nice day, continuing from yesterday. Again, proving the point of buying dips every single time. This is enough of a bounce from the low that your baseline is much higher. There should not be any problems going into the weekend pushing those positions. And it really sets up how we like to put our plays right now, which is you're buying at the money 3 months out. And we look to keep pushing those and kind of transition those when there's a time to do so that we're always sort of pushing the envelope further and further down the line, kicking the can down the road while still getting a much better return than just the market average, which is the point of using the options in the first place, right? You only need a certain amount of those to actually pay off, right? We don't need 100% gain on every single one of these. It's not even going to happen, right? We're moving way too slow for that, which is why we're trying to push out longer term so that we can capture over a longer period of time, understanding that there is short-term volatility, which is going to cause options to obviously take some losses in the short term for the longer term gain, right? A lot of it right now is still sort of up in the air, especially when you look at the mega caps, because again, retail, what are they going to do? I expect them to come into buying. So we'll see how that plays out. I'm going to be watching really tomorrow to see if some of that starts to get sold, because again, they're like rats, right? They just kind of, they're in, they're out. You can even look at the open interest to volume sort of ratio and to start to see how those are changing day to day. That's one way to maybe sort of root out the rat problem with retail, right? Is you find these sort of ratios that are all over the place, and you're like, okay, there's a bunch of open interest here, there's a bunch of volume here, and none of these are really adding up in the same way. Someone like myself, that's, when I talk about buying for 3 months out, I'm not going to exit that position until it's time for me to, my delta's getting close to 1 and it's time for me to transition it. If they're selling before that, then it's retail every single time, because no institution's ever doing that. Institutions are not selling before you get, again, you need to get close to 1, or you just have something else you want to be doing. It would need to be something better to buy, right? Just like I talked about this morning in the discussion of, you're going to stay in equities until there's something better to buy. There is nothing better to buy. No one wants bonds. No one wants anything, right? This is where everyone is. And now it's a question of who wants to get into the derivative side, right? So everything looks very good. One thing I want to point out is for the pharmaceutical side with IPs and everything, a day like today on Moderna, again, looking at it, we're getting close to possibly continuing the trend here. But the one thing I want to point out is that we have a lot of tickers doing this here, which is, again, I don't want to point out patterns before they happen, but it's important to think about it. When you have this big, sharp sort of downturn, it's a trend, but not so much a trend, but a very short rally, either to the upside or downside, forms that sort of flagpole, right? And then you've got the consolidation through here, which is a little bit flaggy. So it's a little bear flaggy through here. And we have some positions that are like this right now, or at least some sectors and everything looking like this. It's especially on the growth side. We have some tickers that are coming out of a low. This is coming out of a high, so it's a little bit better. But it's important to note that things like this can really quickly turn to the downside. And this is where you don't want to buy here. And so if you see tickers that look like this, if you did not enter down here, I'm going to use a Roku as another example because we looked at that this morning. You don't want to be buying right here, right? This may continue to go up, and it was fine to buy down here, but it's not fine to buy up here. And this is where you're going from very low volatility. There's not much volatility here at all, but you're starting to get into an area where volatility is going to be much higher, whichever side it's going to be on, right? It's either going to be a big move to the upside or a big move to the downside. That's not very good probability. That's not really what I want to be doing, right? We want to understand that, okay, there's going to be a lot of volatility, but we want to have direction, right? We're trying to directionally trade. We're not just betting on more volatility right now. We're trying to bet that there's going to be a trend over a longer period of time. These kind of trades here are not what we're going to be a part of. Whether or not these continue to go up, and again, this discussion here with pharmaceuticals is around the IP issue about whether that's going to actually be good for the bios or not. Again, it shouldn't really matter, but everyone wanted to cry about it over here, and it did throw off our trend and understanding of what was happening. There's going to be a lot of decisions made, and this is, again, where the market has an argument, and we argue it through price. And so we're going to find out. I'm not going to be the one that decides that. So would that apply to MGNI as well? Thought it was pretty up to play. Looks similar to that chart. I'm pretty sure that this side of things is completely different than like bottom fishing territory, but it is a similar sort of angle. But this is what I'm talking about, yeah. The Moderna is a little bit higher, so it's a little bit better. But yeah, when you get something like this is much weaker, right? You're basically, so that's a good point. This is even worse, right? Imagine buying it over here on this candle. You'd be chasing momentum today. Maybe you made money if you bought it open or something, right? But if you bought up here, you probably feel like shit going into tomorrow or going over the weekend, because more than likely, this is just a local high, and you're going to get pegged off somewhere, and you don't really know where, how, anything like that, right? Now, sometimes it could be coming off the support, but that's what every single one of these looks like, right? Looks like it's coming off support, then it comes down. You could say, well, why don't we just trade it from the low to the high? That's not how trading works. You don't get to decide when the low and the high is, right? We don't have a crystal ball. You would need to see a breakout, right? And so I talked about it this morning. Any chart that has this sort of thing here, You got to wait for the breakout, right? I'm going to just make it rough here. You would need to wait for a breakout and be like, okay, that's a clear breakout, and this is bullish now, and I can buy it, right? Most of these tickers are not like that, right? And there's some sort of bottom thing here, and you'll get caught here. Look at, you could do the same thing over here, right? Oh yeah, see, it looks good, and then it comes down. Oh, see, it looks good in here, comes down. It's the same thing, right? So yes, that's a good ticker point. I'm gonna mention Mobski's question about CSEO. So this here is pretty straightforward. It is pretty straightforward. Um, yeah, when you get a gap down of 4%, you're gonna lose basically all the value on it, right? Uh, it kind of makes my comment a little bit funnier because I was saying just hold it and be a hero or you lose it all. You're actually in a better position than that because when it comes down to it, it is pretty bullish right now. And so even though you lost 40% and it is at like 70, it closed at 75 cents on those contracts, there's a boatload of people in those contracts right now. And basically no one sold them, right? There was all the volume actually got bought. And this is again, it's the IV is at like 20%, so it's pretty damn low anyway. This was all just due to the fact that it's out of the money, right? We're already talking. This is like 5%, I'm pretty sure, right? Yeah, so it's like, okay, it's 4% from where it closed up to 55. So it is basically 5% to break even, right? You would need about 5% from where it closed to get to break even on the contract in terms of strike price. CSEO barely moves already, right? If you go put this somewhere, you can see that's about 2 weeks of time usually, right? It's about 2 weeks of time that to get that amount. And so if you now put that to here, you would need a trend here, which I would say is going to happen. So it's definitely worthwhile to hold those contracts from this point, even from where you are. The value just comes from the fact that again, if you bought from a low point, which again is never going to happen, right? You're never going to get it perfect. It's the fact that buying up higher, gaining all the points here, right? And then losing it, it's not losing value, it's really losing the time. You lost all the time through here, it just traded sideways, right? And it's just the fact that it's out of the money. The delta is very low right now. The problem is with those contracts is that you straddle at the money so much, right? It's not like there's a contract every single dollar. It's the fact that it's every 2.5, right? And so you get into that situation where you're not even close to 0.5, right? You're not even close. And it's going to cause a larger exponential loss. You gap down 4%, you're gonna lose a lot there, right? That's the whole point of holding into earnings. You may gain it or you may lose it, right? There's no decision you can really make from the open. I imagine you held it because it just kind of went bid from the open. The chart looked great today. We looked at it. If you look at the recording, I talked about it this morning when you mentioned it, and I was like, it's probably going to come right back up to here. And that was off the first candle here. It actually felt like a weird situation where it's like this is actually a great spot to buy right now. And so if you have contracts like that you look at, I don't know if you felt this way, but when I looked at it this morning, I was like, these are contracts I'd want to buy right now. Even if your contracts are down a lot, hey, it happens, right? Earnings blows you up. If you ask yourself, I would buy these, or tell yourself I would buy these right now, then that means you hold those, right? You hold those because it's one of those, situations where if you're willing to buy it and you already own it, then you don't need to do anything, right? Sometimes you can, like, if you bought more here, your average would look a hell of a lot better. But I mean, if you're already in it, what are you gonna do? You're not gonna. It's doubling down. There's way too risky. Shit's gonna happen. And 4% on Cisco, like you just got fucking unlucky that it was so many points, right? The fact that it was 4%. I mean, if it was 2%, you would have been fine. It's the fact that it was 4% and came down below the low, right? I mean, that's an insane move. Look at the move here. That's almost 6% from low to high. That's never that does not happen, right? That does not happen. Now, it happened last earnings, right? But it's very rare for that to happen, right? Shit happens. It was not IV related. And the reason why it wasn't IV related is because this chart barely moves anyway, right? And there's not much there's not much pricing in terms of volatility. Everything's very when a move gets going, even in these larger candles, there's not much volatility being priced on these because it's very sort of trend esque, and it's the fact that it's a part of something that's so low on volatility to begin with, right? That you're just not you're not in a situation where you have a bunch of sort of, I don't know, we can't really use retail, but you don't have a bunch of people hedging going into earnings on something like Cisco. If it was something like a like a different type of tech company, you'll have things like maybe they'll announce something, maybe they have something coming up into the next quarter that people start to hedge. No one was hedging this, and so if there's no hedging, then it doesn't really cause anything, which is probably why you saw so much loss and probably why Cisco loses so much is that no one hedges going into earnings. So then it gets sold from a preemptive sort of a pre-market approach. I mean, it doesn't really matter. Uh, Obviously, it would have been nice if you could have uh, had a lower price point, but again, it's never going to be perfect. And I mean, if you were able to bond from the open, then you could be like, wow, I'm higher even when it gapped down. Which the contracts, if you like the chart you posted, I mean, technically it is higher, but yeah, it's not definitely not something to worry about. What a phenomenal day on that chart. I mean, if if the idea that earnings don't matter doesn't it doesn't radiate off of this approach. I mean, look at this candle. You gap down 4% and put 6% on from the open. So I mean, earnings obviously don't really matter if that happens, or at least the pre-market action there doesn't matter. Which it is pretty silly that it only takes one order and someone sold at a 4% loss on one share for it to open 4% lower on something like that. That's how silly the auction system is. So what can you do? What can you do? I do want to mention for tomorrow. Let's see. Let me get some charts. Okay. Things like Ford uh going into tomorrow, we're sort of in this situation where maybe this chart gets back to being activated in some sort of way. Now, clean energy, EVs, and everything have been beat to shit. And again, this sort of question on uh, whether or not these are good picks comes down to some of your ideas of what you think. Now, I think that clean energy and EVs are good for the long term, but I'm talking like 5, 10 years from now. Like, I think everyone can agree on that. The more money will be there in 5 to 10 years. You can't really buy things for that idea. It would be nice, but that's not really how things work, right? And I still am skeptical that there's going to be anything in the near term that actually activates any of this and sort of makes people go, okay, this is like a very in the now situation. We don't really have that, right? And it comes down to just being technical. What I'm going to do here, we converted Ford to an EV chart way back in here, right? When this started to break out, it's when we converted to an EV chart. Obviously, last night they announced like a Ford F-150 EV truck. We've already priced it. You can see how it opened higher, but everyone's already pricing it like an EV anyway. This sort of situation, you remove all the bells and whistles, and we just look at it as any other ticker. We just look at price, and we start to trade it technically, right? We come back up in this range. Look where we are. You want to think about it like this. We've got a bit of a range in here. If you break out of this range, it's open season up here, right? This is all time. This is high. These are the highs, right? This chart is not as weak as sort of when we look at the other clean energy tickers. These are fucking weak, right? Now these are weak. You start to like the good average is ICLN. This is weak, right? And yeah, you could say, well, I mean, it's probably going to be higher in a long period of time, but you're going to lose money the whole way there. So that's not a good idea. Ford is a little different, right? So I think the best thing to do is to, right now, I'm very sort of negative on clean energy and everything of buying it right now. But maybe we remove that from the Ford chart because it is trading a little differently. Again, look at Tesla. See, I don't want to compare Ford and Tesla when this is fucking in the middle of no, like it's terrible, right? I would never buy down here. It's just bad. And so I'm going to be looking at things like Ford and looking at some of those charts that maybe they're in a sector that maybe it's growth, maybe it's maybe it's something like Ford, it's an EV. Those sectors that are negative, but maybe they're making a move that we can sort of handle. This is things like COVID winners. I don't want to buy Etsy down here. Like, yeah, if it's going to go up, then we'll try to figure out a way. But again, same thing. This bearish sort of flag. This is your consolidation. That's the flag. That's the pull. I don't really want to buy something like this. But hey, there might be some COVID winners that sort of show themselves. Again, this is tied to retail, that we can get some risk on, because right now, I'm pretty sure if any of you have a portfolio like mine, I'm pretty fucking passive right now. I don't have much risk on anything besides travel. And this hasn't even really been that risky. I mean, holding through this kind of shit it's really not that risky to hold through this gain into this loss here. Like, it doesn't feel like I'm really doing anything that crazy, right? I'm pretty sure everyone's thinking the same thing here. Putting things like win on here, I don't really feel like I'm putting much risk on holding this over the weekend. So yeah, I want some risk. I want to, again, we want to be very careful of our understanding. Right now, the market's going to be slower, so we need to trade slower, right? We need to be more passive and pushing long. We need to be longer term and not trying to, during short-term volatility, trade short-term, unless it's something like, again, like travel that has short-term volatility all the time. We want to maybe find some things that haven't really done much of anything, but we can look to possibly get in and sort of preempt some moves. And a lot of this comes from a bias of retail. We got to think like that a little bit more. So you got ideas? Fucking pitch them, because I'm ready to maybe put some risk on tomorrow. I think tomorrow I'm going to be pretty rowdy. I'm going to come with a mindset to be aggressive. I got the cash ready. I'm ready to buy some shit. I want some 100% weekend trades, right? It's not about forcing things. I think it's just, you look at the last couple days, I think that they were kind of weird. I kind of got a weird tone from some people I talked to about, there's just people that don't have the belief I do, but which is just buy every dip. Obviously, everyone does think that because the market's doing it, but I think those types are going to be willing to put some risk here. I think it's just time, right? You think about maybe what we were doing in here. We finally get some short-term volatility. I want to bet our way out of this, carry this momentum right into next week, and maybe even just take profit on Monday on those really short, risky positions that we're about to put on. So tomorrow, that's what we're doing. I have one good one to get you guys started. I talked about it this morning. I think it's a really interesting idea. Whether or not I'm right or wrong, I mean, it doesn't really matter, but we have good probability, I would say, is to whack the shit out of this lumber thing, right? So commodities had entered a super cycle, right? Big gains, right? This lumber went over hundreds and hundreds of percent, right? What happened? Well, we downturned, right? But these last 2 days have been pretty big. Do you know what follows the lumber? So I'm going to compare this to energy. What does energy and oil companies follow? They follow the commodities of oil. They follow the future contracts of oil, right? You can basically just compare every single oil company to spot crude. And you look at the crude futures. If the crude futures are up before the day starts, then the oil companies will be up, right? That's how this shit works. That's what we do. That's the whole equity market. We trade off of other markets, but with equity. Lumber and home builders. Home builders are quite literally tied to the lumber price, right? You go to buy a house, based on the price of lumber is how expensive your house is. Again, there's other economics that matter, which also, again, you're basically just betting on the housing market. I'm going to bet that more people are going to keep buying houses. We're not going to get that data for a while, so that's not what we need to trade on. That's just a macro idea. Yes, that's demand's going to be there. So if we say demand's certainly going to be here, we can trade it just off of the technical that, okay, lumber prices came down here. Everyone bought them. And when I mean everybody, I mean, it's a pretty nice 30% discount. And if you think that prices were going to continue anyway, then here's a really nice opportunity. The way in which these trades, I did a little bit more research. I was comparing it this morning to how I used to do my gold trade with JNUG and things like Nugget on the leveraged ETFs of gold. You trade it within the first hour. That first hourly candle, right from the open, it either goes up or goes down, and you watch the first ticks that come in from the market. If the lumber prices are going up and those future contracts are being bought in bulk to go to the upside, they happen at 10 o'clock. You go look at the big orders that come in through this trend through here. The big order gets placed at 10 o'clock. This is how their timing works anyway. But if it's going to the upside, the orders get placed in at 10 o'clock. Those are the future contract orders that come in. These big orders right here, that's 10 o'clock. If you look at the downside, it's the exact opposite, right? It's the exact opposite. This is how gold works as well, but it's a little bit more sort of jaded because, again, that's a 24-hour market and it's always liquid. What we do is this basically, I saw it and I was like, okay, so these sort of positions, all you have to do is follow and see that those ticks come in on again the futures, and then you're set. The equity market lags. The equity market will lag it. There's nothing for equities to trade off of other than these prices. So all you need to do is make sure that we see that the ticks are coming in bid, and then to continue that towards the end of the day tomorrow, going into Monday. Monday, you have enough of a chance that if it opened lower to get out of that position, especially if we're trading with options, because there will be market makers. Market makers will not change. They'll be lagged until this data comes in, which again would be around 10 o'clock. And so we have 30 minutes on Monday morning to get out of the position without losing much of anything on the home builder charts, right? So that's things like NAIL, ITB. There's a couple other tickers that we use, right? And so the home builder play through the lumber price is going to be a meme for tomorrow. So again, should be a lot of fun. I think it's an interesting idea. And again, it's very similar to the gold trade that if you guys have been trading gold with me using things like JNUG, XME, right? These sort of trades are very similar in that it's lagged and that it's very open specific. You don't trade this beyond the first open candle. Look at this mess. Throw this bad boy on the hourly. That's it. Hourly candle goes bid. That's it. If it's not, you get the fuck out, right? And you don't need to, you can just look at the gold market before this opens and see where it's going, right? Same thing with energy, right? You look at the energy charts. Oh, crude's up before the day starts. Going to go bid in the first hour candle. That's it, right? And you have time on the equity side to basically preempt what's going to happen. And it's again because market makers are providing liquidity to everybody. We're little shrimp. We're tiny, right? We can get out of that position immediately. This is where you can beat the market by using other markets as an advantage, right? I don't know how the futures market works. I have no idea, right? I don't know how many pieces of lumber you get or anything. It doesn't matter. It's about its relationship, right? So I think that'll be a lot of fun. Again, to put some risk on, have some fun. There's a few other areas again that we'll look for, and I'll have some tickers that we can play with in the morning. Otherwise, we hold all those long positions over the weekend. Even if we dropped fucking 3% tomorrow, I would be holding the same position. So again, it doesn't really change anything. So if this came all the way down here, which it's not, you'd be in the same positions anyway. So, and again, if that happened to Apple, your position would probably be fucking up at this point because now there's a ton of contracts in here and they're not going to be able to move. So yeah, you're probably good. That's what we got, guys. Yeah, we're gonna have some fun tomorrow for sure. We're gonna have some fun tomorrow. I will see you guys in the morning. Charts will be up in the morning as well. So enjoy your night, your evening, afternoon, wherever you are. And until then, enjoy.